Hi guys, Chart Guy Charlie here doing another video. Today we're going to talk about multiple positive signals converging together in one place. That's the topic of the day. Okay, multiple positive signals joining together in one place, one area. And this is super important. This is the most important concept I think you need to know as a trader. Money management being most important, but as far as placing a trade, entering a trade, this is it. We need to know if we're in a confirmed uptrend, if we're going long, or if we're in a confirmed downtrend, if we're going to go short on a stock. So we're going to talk about this today. As an example, I'm using CNDT. It's a stock that a lot of you are probably familiar with because it had huge news last Friday. And it's definitely a stock of interest because, as I'm going to point out, it's in a confirmed uptrend, so it's now a stock of interest. Now, let me get something clear. It doesn't matter what time frame we're looking at for these concepts we're going to talk about today. This could be happening on a day chart in a 1 minute time frame on a day chart. It could be happening on a 6 month chart, looking at things in a longer time frame. It doesn't matter what the time frame is. The chart analysis applies in any situation. So get that straight in your brain that it doesn't matter what you're looking at as far as the time frame goes. Now, this particular chart that I have up in front of you now, if you notice at the bottom, it's going all the way back to September of last year. You'll see that I have a white downwards trend line. Let me get my tools up here. You'll see this line here. This is a trend line I've drawn from this high to this attempted high here. The stock is clearly on a downtrend on several months, and we see that it hit a low here. Okay, it kind of made some sideways movement here, retested this low, moved up significantly where it met resistance at that trend line that I drew. It was approaching its 200-day average, and it kind of about in the same area as it was before. So I believe the 200-day moving average was in play there on some resistance. It pulled back and got into this area where I'm going to call this like a second bottom. Could call this a triple bottom. We had the good news come out, and what did it do? Well, huge volume, and it broke the trend line. Not only did it just break it, didn't just crack it, it exploded through it, and we're up in this area now. So that is confirmation of a trend line break. Okay, so that's the first thing that we will talk about, is that we've clearly broken this downtrend right here. That's number one. So we're looking for positive signals converging together in one place. That's our first positive signal. Okay, that trend line break. We'll go into number two. I would call that the double bottom. So we were just talking a little bit about the double bottom. What constitutes a successful double bottom, or I shouldn't say successful, the breakout of a double bottom. The breakout of a double bottom is defined by where, if and when, rather, it breaks the neckline. The neckline would be this point right here at 383. The point where a stock hit a low, made its biggest rally attempt, and then another low similar to where the first was, could be a little bit below, but it shouldn't go very much below. It should be similar or a little higher typically, and then breaks out above this neckline. Now it can do that in stages. It can do it like this and break out here. In this case, with the huge news and the huge volume, it did it in a day. That's concerning only so far as it made a significant move, and you could argue that there is a lower chance of success because it did it so quickly, because of the distance here from where it was to the neckline. You'd prefer to see it happening a little closer. So that's the concerning part, but nevertheless, it did happen, and it is a confirmed double bottom breakout. So while not ideal in how it got there, it did it, and we're going to mark that as another positive. So we got two positives so far: trendline break and double bottom reversal, breaking past the neckline. Moving on to number three. Number three, I don't like to use moving averages all that much, but they are useful. And if you notice, the purple line is the 50 day that I have drawn here. This is the 50-day moving average, the purple line, and this yellow line is the 200-day. It cracked the 200-day and it closed above it. So that is another positive signal converging here. It's another confirmation of an uptrend, another reason to buy. And when you have a resistance broken, the resistance broken becomes support. So the neckline break here becomes support. The trend line break, which actually converged right with the neckline, is double support. So you've got double support at 383 over here. You've got the 200-day moving average also coinciding over here with 283. So you've got triple support in this area. That's multiple positive signals converging. That's multiple positive support converging at 383. Good stuff. So let's move on to number four. Number four is always volume. Volume is very important in a reversal and any kind of a break, and whether it's a cup and handle break, a double bottom break of the neckline. You don't want to see that on low volume. You want to see that happening on high volume. If you've got a pattern, you know, such as such as this going on, and you get a break above here, you want to see that on high volume. Any kind of a breakout of any particular chart pattern, you want to see this. So I'm giving that another added signal here. So that's number four. Again, number one, trend line break. Number two, double bottom reversal past the neckline. Number three, above the 200-day moving average now. And number four, volume. What do we have for number five? I would look probably at the day candlestick, or if this was a minute chart, the minute candlestick, where it's happening, and what that candle looks like at the point that it's happening. Now, analyzing this, because this was a day, this happened in a day, last Friday. The candlestick right here, I'm going to give it a definitely a positive signal, and we're going to talk about that more in detail when I go to the 1 minute chart. But suffice to say, for now, it finished higher than it closed, and it finished at least in the middle or higher range of the day of the candle. So we're going to talk about that a little bit more in detail coming up. But before I go to that chart, I want to talk a little bit about what I would call number six, which is past overhead resistance. If we look in this time frame here, which would be March, February, this area here, it's pretty smooth decline. You want to see a smooth decline. You don't want to see a lot of junk like this going on, where you have a ton of different resistance lines set up for failure as this breakout occurs. You would prefer to see a smooth, definite downtrend, and I kind of like what I'm seeing there. We do see a bit of a spike here, where this would be my first area to watch out for, which would be about $5 over here for resistance. This is all pretty smooth here. I mean, you've got some junk here, you got some junk here, you got some junk here, but the blue line here is really the most significant line of resistance moving up based on this past performance over here. So enough said about that. But just suffice it to say that this creates a void here, a tradable range, because this happened so far in the past. Most of what's happening is this area here to be concerned with as far as psychology goes. So let's move on to the daily chart, where we can talk more about the psychology and a little bit more about what happened on the day. We're going to go into a one-day chart now, and let's just start with a 1 hour chart. So you can see probably something right away that's pretty striking is a chart formation that happened on the day. This going on right here is a pretty familiar pattern called a bullish pennant. It's nice to see that happening on an uptrend. If it was happening on a downtrend, it would look the opposite of that, and would not be something you'd like to see if you were long. But you want to see that shape if your stock is trending up and on high volume. Why? Well, because with this convergence right here is far more likely to go that way than this way. Far more likely. Will it? I can't predict the future. I'm just telling you that it's more likely to do that. So that is something to add to our list of another positive signal converging in one place. We talked about overhead resistance. Let's talk a little bit about that. We talked about the previous overhead resistance from months ago, but let's talk about what happened Friday. What's the psychology of the people that bought Friday? Are they going to be itching to sell first thing in the morning, or are they going to be pretty relaxed and wanting to hold and see how this plays out and see if they can add to their profits? So let's zoom in here a little bit more to analyze that. If you look at what happened on the day, it's pretty positive. If I bought this stock Friday here, or here, or here, or here, or anywhere in here, or anywhere in here, or even where it closed in this area here, I'd be waking up Monday morning not itching to sell. I would be looking at all these positive signals that happened after analyzing it post market. I'd be looking at if I wasn't trading in real time and maybe missed some of the things, I'd be looking at, wow, this thing's got a lot going for it. It's broken the trend line. It's got a double bottom reversal past the neckline. It's above its 200-day moving average now for the first time, and then which provides support. The volume was huge. The overhead resistance is minimal. The psychology of the people that bought is great. Pretty positive. I'm not going to wake up itching to sell first thing in the morning. I'm going to be waking up waiting for more upside, hoping for more upside. It's not. I'm not going to say I'm not going to be careful. I may not be buying right away. Maybe I will. Depend. We're going to talk about that in a little bit. But you're not going to have a lot of people um, just they can't wait to get out of this stock. You'll see stocks. You'll see stocks that trade a pattern like this, where they'll shoot up in pre-market, they'll pull back into this area, and they'll move this way in pre-market, and then the market opens up, and what happens is they sometimes will start to decline a little, and there'll be this happening, and then this and 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 this, and they'll end down here, and then they'll go flat in aftermarket, and you wake up Monday morning here, and what do you have is the common phrase, bag holders. Well, what does that really mean? It means that all these people that bought from here all the way up to there would be lost. They've all lost money. The people here lost a ton. These lost a ton. You know, these maybe didn't lose as much, but they're down. This person's down. Everyone's down except this little area here. So what do you have? You have a bunch of people wanted to escape. They want to. They're mad they didn't sell, or they're mad that they took a trade and they didn't have a day trade because of the pattern day trading rule. You got a lot of angry people waking up Monday morning in a situation like that, and they're pissed and they want to get out, so they sell right away. You don't have this situation going on with CNDT Monday morning. So add that to another list of positivity. Another positive signal converging together in one place. This place right here. So, all that said, let's talk now about this. You know, when you're trading not in a vacuum. This is why you're looking back all the time. If I was trading, if this market was happening and this is happening right now, I'd be analyzing all this. I'd be looking at the 6-month chart. I'd be looking 3 months back. I'd be looking at all these factors and deciding where I want to get in on the trade. So maybe some of you are already in on this trade. Maybe some of you are looking at it now. So let's pretend the market's opening right now. It's Monday morning. Let's say you're trading at 4 o'clock and it's pre-market, and we're gonna walk through some scenarios, and I'm gonna give you my ideas about how I would consider entering this trade. Remember, you need a trading plan. You don't enter a trade without a plan. You enter a trade with the idea that you have all these positive signals converging in one place. You have confirmation. You have confidence that the stock is more likely to go up if you're going long. You have more confidence that the stock is going to collapse if you're going short. So you want that. You want that, and you want to immediately have, as you're placing the trade, in your mind, you immediately want to have a stop loss idea where you're going to put your stop, and you're going to have a profit target about where you'd like to get out. You're not just going to go into the trade and close the book on it and without putting a hard stop, or at least visually watching and having a mental stop. So let's now talk about some scenarios here. Let's zoom this in here a little bit. I would say this area here looks pretty good. Get my pen back out. So we talked about this bullish pennant. If you want to draw it this way, you can draw it that way from the bottoms of these candles. One scenario could be that it just opens up flat. So you're opening here. Well, if it starts going up, that's pretty positive. I might be buying right away because it's breaking out from the pennant. So I might be buying right away and putting a stop. I would likely put a stop like right here in this area. And I'd have a target maybe here as a conservative one, and here as a more aggressive target. So you got a buy point, you got a stop, you got a profit target, or another profit target. Okay, or it gets to this one and you raise your stop up below that target. The idea is to have a trading plan. So that's one possible trading plan. What's another possible trading plan? Well, let's say that doesn't play out. Let's say what happens is the stock opens here and starts going down right away. Well, would I buy right there? I might buy right in this area here at $4. And where would I put my stop? Well, the obvious place is right here where we have multiple support. This is the neckline. It's also, if you remember looking back, that's the point where it broke the trend line. It's also the point where the 200-day moving average was on that 6-month chart. So you've got a lot of support there. It's a good place to put a stop. If you want to be a little bit more risky, I would put the stop right here in this area. I would not let it go below 360. Going below 360 would signal a possible failure of this breakout, and I wouldn't want myself personally. I mean, it's possible that this could go something like that and then shoot up the rest of the day. You can't predict the future, but I personally wouldn't want to go below this point right here. So a good place to enter the trade would be here, or right on the white line here of the neckline with a stop here. So you'd have a stop, a buy point either here or here, and profit target. Well, we're back to the similar profit target. If you're buying on a lower point here, you could lower your profit target. You could be willing to be conservative and get out in this area, or this area, or this area. So you have a little more flexibility if you're getting in lower on the trade. Now, that said, what happens if the stock gaps down or gaps up? Well, if the stock opens way down here, I would probably get out pretty quick, or at least be ready to get out if it drops. If this is if you owned it already, you wouldn't want to see it open here. It would not be a good sign of it open. But pre-market is not likely to do that. This is something to be likely to happen as pre-market is moving along throughout the early mornings. So you'd already have a chance to put a stop in place. If the stock gaps open in pre-market in this area here, well, not so sure I would buy there. I might want to wait and see if it comes down and retests where it closed. I might just give that some time and see what happens. Although you give it time and it could just start doing this all morning. So this becomes tricky when things gap up right away in pre-market, because you don't really know where there's a good place to enter the trade. If the stock opened above $5, that would be very significant, because that's where this resistance line is. It's a strong resistance line. You could enter the trade right away and put a stop right at $5 or $4.99 to protect yourself and the thought that the stock could go up from there the rest of the day. So these are just all ideas, all things that you need to think of. I can't tell you what to do. I can't tell you where to enter the trade. All I can tell you is you got to think about whether the stock is in an uptrend, whether it makes sense to get into the stock. Is it a stock of interest? Does it meet the criteria that it's in an uptrend on a long play? These are the things that I can tell you But the other, as far as exactly where to enter and where to put your stop, how much room to give your stop, where to put your profit target. A lot of times it gets close to your profit target. It's 2 cents off, and then it goes down the rest of the day, and you missed out, and you're upset. I can't tell you where to exactly put these profit targets. You have to determine. There's a lot of videos that talk about 1R and 2R, based on your risk reward. Watch some of those videos. That might help you decide what you're comfortable with as far as where to put a target based on your stop. That will probably help you if you watch some of those videos. There's a lot of them out there. But that's about it for today on this. I think I've covered everything that I wanted to. I hope that this is helpful. If I've missed anything, if you have any questions, please post it in the comments, or if you have another stock you want me to analyze for you. But this is a stock that is definitely of interest for me. I'm going to be watching it intensely, and I'm very likely to get in on this stock based on the patterns that I see here that occurred on Friday. So good luck to you all. Happy trading. Use your common sense. Don't buy on the news. Buy on the charts. Don't buy on recommendations. Buy on the chart. Your chart is your friend. Use your own brain and look at the charts and try to get better at them, and keep your losses small. Don't place a trade if you don't have a day trade. That's huge. If you can't get out, if you can't put a stop loss on because you're out of day trades on a pattern day trading rule, that's risky because you can't control how much it's dropping, and you can lose 50% in a day, and you'll be really upset. I've been there. We've all been there. I'm trying to prevent you from being there by mentioning this. So think about that. And happy trading, and I hope you all make some money.